Here's the Elliott wave forecast for March 3rd, 2011 on Nasdaq 10-day chart. Worst case scenario is that the drop from 2840 to 2708 was an A wave, and then we got a B wave to around 2800, and we could drop in a C wave. If we gap down below 2708, it'll set up a downward C or 3. But the futures are up slightly, so there's a chance that we might retrace to at least 2780 to the upside, or an upper 2. Uh, However, the rally intraday could actually be the upper 2. And if the futures reverse to the downside, it might set up again the downward C or 3. We got to hold 2708 and then bounce back over 2800. If we can do that miraculously, then you can prevent a downward C or 3. For S&P, worst case scenario is that you got an A wave from 1344 to 1294, a B wave right to 0.786, which sucks because 0.786 is like typically a breakout. If you can close above 1332, which is 0.786, it would have set up on upper 3, but we touched it right on the nose, which is really irritating. And then we dropped, and it could be a C wave down. If the little rally from 1305 to 1313 intraday in the S&P was an upper 2, worst case scenario is a gap down below 1294, set up an upward C or 3. But the futures are up slightly. I don't know how they end up around 8:30 tomorrow morning, but we're setting up for a downward C or 3 at worst. So we got to take out 1325 minimum, and then 1332. If we can take those two levels out, you can set up a test of 1344 to the upside. But the worst case scenario, it isn't 100%. I mean, I wouldn't say the chances are greater than that we get an ABC, but we need to obviously take out the resistance levels to the upside to help prevent this, and we need to hold 1294 to the downside because that'd be A, then B, then C. C wave would target as low as, let's see, about 1270 to 1280 to the downside at worst. For the Dow, worst case scenario is that the drop from 12,390 was a A wave, and then you got a B wave to 12,260, and then we're setting up for a downward C. Uh, the worst case scenario is they got a full downward C to as low as around 11,800 to the downside. That'd be A, then B, then C. So we need to rally above 12,200 to prevent this. I mean, this looks like an ideal ABC formation, however, because the retracement in the Dow is deeper than a wave 2, a lot deeper than a wave 2, and a wave 2 though can hold 11,980 at best, but it's gonna be really hard. I mean, I would say just let the ABC happen so we can get this thing out of the way because it's just I mean, it looks pretty simple ABC. So just get out of the way and restart the bull market, and that's it. That's a wrap.